After Google's excellent results, more good news came last week. Other tech giants like Meta and Microsoft didn't lag behind their peer, and today's video will take a closer look at them. Meta released its results on Wednesday after market close, and the numbers exceeded all expectations. That's also why the company's stock jumped by 10% shortly after, and since the beginning of the year, it has already risen by over 25%. If we ignore the sharp drop in April, the rebound actually amounts to a 50% increase. So, why the growth? Well, Zuckerberg's company increased its revenue by nearly a quarter year-over-year in Q2. It also nearly matched the numbers from Q4 last year, which is usually stronger due to holiday advertising. That's because advertising makes up the vast majority of their revenue. Ads will now also be shown to users on Threads and WhatsApp. Just under half of the revenue comes from North America, with Europe, Asia, and the Pacific following closely. Earnings per share rose 38% year-over-year to over $7, and even more importantly, significantly beat analyst estimates, who were expecting just under $6. Another positive is that the operating margin increased by 5%, and operating profit rose by an incredible 40%. Naturally, net income followed a similar path. The number of daily active users on Meta's social platforms in June was almost 3.5 billion, which is again a 6% increase from the previous year. The company has seen continuous growth in this area for several quarters now. Meta hasn't forgotten about artificial intelligence either. In June, it invested over $14 billion in Scale AI, acquiring a 49% stake in the company. In return, founder Alexander Wang will help Meta build its superintelligence lab. Capital expenditures have increased, just like with Google. But that's something tech firms simply can't avoid right now. In Meta's case, AI helps recommend posts to users, which naturally keeps them on the platform longer and increases ad impressions. At the same time, ads can be better targeted. The future also looks promising, with the CEO expecting third-quarter revenues around $48 billion, again above analysts' estimates of roughly $46 billion. That would represent over 20% year-over-year growth. However, things may slow down by the end of the year, as Q4 last year kicked off this impressive rally. So we'll see just how far Meta can go this year. Considering that just a few years ago some were calling this company dying, things aren't looking bad at all now. Do you own any shares of this company? Let us know in the comments. And before we move on to Microsoft, don't forget to subscribe so you won't miss the next video. Microsoft's results, released on the same day, followed a similar trend. The stock price briefly climbed above $550, though it has since dropped by about $20. For a while, Microsoft was only the second company in the world with a market capitalization over $4 trillion, the first being Nvidia. Despite the recent dip, the stock is still up more than 27% year-to-date, and just like with Meta, it's grown 1.5x since the end of April. We don't really need to introduce this company. Its products have been with us for quite some time, and they likely will be for many years to come. Microsoft's fiscal year is different, so we're already talking about the completed fiscal year 2025. Revenues grew 18% year-over-year to over $70 billion, with the biggest jump in the cloud segment, which brought in around $30 billion. The cloud and Azure divisions hold the most promise for the future, just like we saw with Google. Even though the cloud margin slightly declined to 68%, the potential remains strong. Net income in Q4 was just over $27 billion, and earnings per share came in at $3.65. Both figures represent a 25% year-over-year increase, and EPS beat analysts' expectations by about 30 cents. Microsoft also continued its share buyback program, investing more than $3 billion, and continues paying quarterly dividends of 82 cents per share. As for spending, it's the same old story. Rising costs due to expansion of cloud and AI. Let's be honest, if a company doesn't mention AI at least 5 times in an earnings call these days, it'll likely pay the price. The outlook for the next fiscal year is also positive. Revenues and operating income are expected to grow by double digits again, and stock performance is expected to follow. An overwhelming majority of analysts recommend buying Microsoft shares, with many target prices exceeding $600. So, what will you do?